Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is December 30th, 2024. This is going to be a little bit of a longer video. We're going to cover Bitcoin on the daily, and then we're going to go up some time frames, talk about the weekly, the monthly, the 2 month, the quarterly, the 6 month, and the yearly. So this is a big one. We're not going to spend too much time on each and every time frame. We're going to start out with kind of the overarching daily things to look for as we head into the monthly and of course yearly close that encompasses all of those other timeframes in between. But let's start with the daily. We have seen Bitcoin now draw down to nearly $92,000. Actually, it did draw down to below 92,000 at 91,271 here. And that was in the Monday candle. Now, of course, it's still Monday for me, but the Tuesday candle is open right now. We can see that, for the most part, Bitcoin still holding above these three major swing lows on a closing basis. Of course, now testing down into these two swing lows right now. We do have the big swing low from the 5th of December. That was that big $12,000 candle swing to swing, or wick to wick, if you will. With the low coming in there at $92,055. Now that is currently, being tested essentially right now. Again, in the early goings of the Tuesday candle. Now, the big thing to look for, obviously, is this area right here. Is this going to hold up on a close? And if it doesn't, there is a few other points of interest here, right? We do have the close open that comes right in line. If we were to go ahead and, essentially, cut across these swing lows here, we do have essentially this close open low right here, and that coincides with this resistance. So we had a resistance to support flip. If Bitcoin does lose this area, then, the next big area to look for, of course, is the swing low just below it. Bitcoin is, if it does close below here, it's kind of playing in between these two lows. If it does drop this, we go to the next low area. And of course, this is a close open to a swing low. Now the closing low here is right around, $90,000. It's 89,886. So essentially we have, a zone, a primary zone between, these kind of four big swings and closes. And in the wider context, we have this area here right around our $88,000 area. On this low, it's actually 88,700. So it's almost, $88,000 to $89,000 rather, to around $92,000. So we have a $4,000 range. If that's dropped, this is not going to look great for the bulls. That's where we have to entertain the bottom side of these candles over here, somewhere around the 87,400, 300 to 400 area on the close, to the actual wick low down here of the first big bear candle after the expansion of the daily structure to new highs. And that swing low is coming in at $85,000. Why do I bring it up in this context? Because Bitcoin is, getting expansion currently. It hasn't gotten aggressive expansion below the lower second, but we see the lower seconds coming in right around, 89,978. So basically $90,000. And we can see that we have not gone into aggressive expansion. In fact, this is, we had the expansion up to the consolidation, and this is almost going to set up into a wider range, even if it does push down further, because we have BBWP under the moving average here. So that's our volatility metric. It's actually not in an expansive phase. It's in a mean reversion phase right now, even though we're getting that downside expansion in the context of like longer term timeframes. Relative to the daily, it's mean reversion, and the daily, it's kind of mean reverting back to this wider range where we have a common set of lows on a close and these swings. Now, if it does begin to break down, yeah, we can get some further downside expansion. I think that, it's fair game for some of the cluster candles over here on any closes below, essentially any closes below 92 to 90. It's likely going to test down below 90 then. Even if it's just on a swing basis, Anywhere below there, then we have to entertain, mid to upper 80s and then possibly lower 80s from there. If we were to kind of zoom out for a moment here, excuse me, I have my cord is right up against my zipper on my hoodie here, and that's bugging the crap out of me because I can hear it through my headphones. All right, so let's go ahead and bring up my local support resistance chart with the local fib pole. Now, this particular Fibonacci extension is from the local range. This is not the macro fib. This is the $69,000. Oh no, this is the macro fib. My apologies. This one is the macro fib. We'll take a look at the local fib pole from here. But in terms of the macro fib, on the daily, we'll go ahead and take a look at this. Bitcoin's kind of entering that red zone that I pointed out on Friday. And that's between a major, a major fib level for me. This is one that I've back tested in both crypto and traditional markets for a very, very long time. The 1.168. So it's basically 16.8% above the $69,000 all-time high here. That's coming in at 88,700. That just so happens to line up with this low structure over here. So we had the consolidation, swing high to swing higher low and higher low close here. And then, of course, we had the retest here coming in at $92,000 essentially. And that's $88,700 to $92,000. That's basically, our $3,000 to $4,000 range. Excuse me. If Bitcoin were to drop that, and especially if it's closing below the lower second and dropping the 1.168, then we're looking down here where you can see the lower third is starting to come into play. If Bitcoin were to push down like in today's daily candle, for instance, and slice through the supports here, then I would expect the lower third to be right around that $85,000 region. If it were to break down from there, I would be looking for further corrections down into the mid to lower $80,000 region. But the look of BBWP here is showing me that this is mean reversion. That's the setup. So it's more likely to just kind of, not saying that this is going to happen, but it's more likely to play in and around that lower second than start to close below and get that aggressive, expansive look to the downside. And if it does, I think it's going to present opportunity because it's got to get above the moving average. So the multicolored line here, which is BBWP, has got to get above the moving average and sit above it for true expansion. Yes, the bands will get downside expansion in the context of mean reversion. So, I think that that's going to present opportunities for the bulls as bears try to push price down further within this structure. And, typically when we see stuff like this, we see like a walk down of the lower second and then a bounce back up. Now, of course, on the daily here, we did have the little bit of a higher low swing with a lower low close to lower high. So we had the lower high swing was more of a consolidation move down, like all one move to retest this low over here. We're still sitting above it, of course, on a closing basis, but then we got the lower high close. So we have a lower low, lower high close. This is now, a trend reversal setup, not just on a swing, but on a closing basis. We're looking for continuation down below this low. We've already started to see that. So lower low, lower high, and then we've got full trend, right? But because it is in the context of mean reversion as it stands right now on the daily, I'm looking at this as likely to start presenting opportunity. And we can kind of gauge that by looking at a few other metrics here. So I'm going to take BBWP off for the moment, and we're going to take a look at RSI. And, as long as Bitcoin is closing above this this higher low or this higher low over here, it's going to get more drives of hidden bullish divergence. And realistically, what I'm looking for is regular bullish divergence. That's what I want to see for like the next big leg. Not just going back to the highs, but going back to the highs and possibly higher. I want to see a nice reset, a nice play in and around or even above where things currently are, the bearish control zone. Start to see some lower lows with some divergence starting to build. Or get another drive of hidden bullish divergence come back up, and then put in a higher low on regular bullish divergence, that would look really good. Depending on which lows overhead it can regain. But as it stands right now, as it approaches the bearish control zone, let's look at that. The bearish control zone's at 90,542 at the moment. So in and around $90,000. Again, what does that look like if Bitcoin's RSI is around the bearish control zone? Well, that means price is trading right around this low inside of this red box area and towards that lower second standard deviation. And again, for those that have been following my volatility explanations for a really long time, if it does start closing below the lower second, it still needs to meet the criteria of, the lower second's currently lower than all of these lows, right? Including this 90,682 low, because it's right around $90,000. If we see it close below, it still has to close below the 88,713 low over here. If it hasn't already tested down further. But otherwise, this is just expansion into support, right? If we do start to see this low loss, then we're looking for more aggressive expansion and a more aggressive expansive posture to go and test this area over here between, right around that 85,000 to what's the close over here again? 87,340. So basically 87,300 to 400. So again, that's still mid to upper $80,000 region. That's kind of the way that I'm looking at it. 92 to 90, anywhere below there, we're looking mid to upper $80,000 region. And to the upside, Bitcoin has to go back up and take out the basis band here, take out this last, it's a higher high swing, but it's a lower high close. So in this case, we do need to see that taken out, unless there's another lower high that comes in before I talk to you again on Wednesday. Yeah, I should try to talk to you again on Wednesday. I will. But in this case, it's nothing too crazy. Where's this high at? It's at 99,887. So basically $100,000, and we're about $8,000 away from that currently. So Bitcoin's got to take that out currently, as it stands right now, to break this particular downtrending structure, and set up for a, blunt this full on trend reversal and then try to trend reverse back to the upside here to go and test, of course, above $100,000 to $100,000 to $102,000 between this high side structure over here on a closing basis and the upper first, which is kind of catching the wicks over here. And then, of course, above there, we need to see closes above the $104,000 swing high to go test the upper second, which is basically the close open highs up here, right around 106,000 to 106,400. Above there, again, I'm still taking it about $2,000 at a time, 106 to 108, 108 to 110. And you can see between the upper second and the actual high, we got about 106 to 108. And from the actual high to the upper third, we've got 108 to 110. Likely going to be a little bit higher than that. And I would still start looking 110 to 112, then 112 to 115, so on and so forth. It starts jumping up a little bit higher because on any breakouts, we're getting volatility expansion. So daily, nothing much more, going on than what we talked about on Friday. Looking at stock momentum, it is getting down into the into the oversold zone. And look, this is a regular Stoch, not a Stoch RSI. So it can stay in the overbought and oversold zones for, longer periods of time. And that's, essentially where we see in these critical areas the largest moves in most cases. And that can either be on a close or a swing. In this case, Bitcoin needs to close back above right around $95,000. If Bitcoin were to start heading up from here today, for instance, off of $90,000 and start pushing towards 93, 94, you will see this number update live to around $95,000. So closes above $95,000 would turn stochastic momentum back to the upside. That would also set a low on a close and throw some of that bullish divergence, of course, at least for today's candle, the Tuesday candle that's open. Now, to set a low, you can see right around $95,000 is where we would need to, not just yesterday's high, but I would actually want to take the open from the Sunday candle, which is just above $95,000 at 95,170. That would set a swing low and a closing low from here as it stands, wherever the swing low would come in if it were to do that. I don't know how confident I am in that happening, but Bitcoin is right on support. We can even take a little bit of a look here at spot volume. You can see that this is definitely a consolidation, as noted, mean reversion into consolidation. That's what we're seeing for volatility over here on this expansion backed into support. Big candles, big volume candles to little volume candles. It's going to go back into a wider compression on longer term timeframes, and likely set up, in terms of longer term timeframes between the daily and weekly here is what I'm kind of looking for anyway. And, we forget, coming out of this structure, this was a very aggressive expansion to the upside. So this kind of a structure right here is not, unwarranted. Some price consolidation and some sideways and down is the name of the game after you get big moves up like that, right? Get profit taking and readjustment and, people trying to push the market around to get entries in certain positions. No, market makers do not push the market around. That's not their job. They provide liquidity. Market movers move the market. That's participants in the market that do that. So, but yeah, let's go ahead. Let's go ahead and take a look at a few other things like the 2-day, just really quickly here. You see that this is an expansion into compression down into the mean reversion back to support. We did get the mean reversion back to the basis band. Playing down to the lower second is fine on the 2-day, as long as it's not closing below. Then we are looking at expansion down. This is in an expansive posture. So we're getting a little bit of disagreement between the daily and 2-day here. What I would say is, in the context of the daily, I think, if things fall further, it's just going to present some nice opportunities for entries. Of course, do your own research and don't just buy based off what I say. Have your own levels, and do your due diligence to pick out areas of the chart if you are interested in getting in any orders for spot or any kind of trading positions. But this is bearish divergence playing out right now. We got another drive. I would say that essentially this is already playing out. And yeah, scale midline's 92,600, whereas bearish control zone, it is the low 80s down at 81, almost, 81, 189 in this case. So, mid to low 80s is down where the bearish control zone is. Big old bearish divergences here. We've got this bear div coming all the way back from, the high side structure just prior to breaking out to new all-time highs. So nothing out of the ordinary there. We know that this has been building up, and the 3 days where things start to get interesting, because this is in confirmed mean reversion back to the basis band. We went from expansion and now we're back in compression. Where would I want to see this hold up? Lower first standard deviation. That's where we have our confluence with that daily right around $85,000. So this is going to be closing with today's Tuesday candle. So the Tuesday into, the Tuesday, the 31st candle into the new year. So that is going to be interesting to watch. On the next closure, we will get further compression. And when you go from expansion into compression in terms of volatility, when you go back and mean revert down to the in the longer term timeframes like a 3-day, you're looking for the lower first to act as a support area in the context of a compression. If it doesn't, you're looking for the lower second. This happens to be right around $75,000. That's looking like, if Bitcoin's heading down there, it's retesting, essentially 70 to 75, which wouldn't be like anything too crazy. But coming into from an expansion, coming into a compression, I wouldn't be looking for like re-expansion down and like all of these crazy downside targets that I'm seeing out there. Same thing to the upside. We need to see the green zone overhead at the upper first standard deviation, right around $102,000. Be closed above, and then we can start looking to that upper second. Hey, go figure, that's by 110. Remember I said 106 to 108, 108 to 110. That also lines up with the daily upper third. If we go to the 4-day, this is big expansion back into a mean reversion. Of course, theme is going to remain the same here. Basis band is right at around $85,000. We do want to see that holding up bulls if you like. Um, I happen to be in a swing short position, so I'm doing okay. I don't really care if you give it up, because then I can take a really beautiful swing long on the other side. But that's just me personally. Do your own research and all that good shit. 5 day, same kind of deal. We see that, yes, it's still in a bit of an expansion. The upper second's there at $112,000. Hey, go figure. I just talked about that a little bit earlier. This is confirmed mean reversion back to the basis band. While the basis band is rising, you want to see it holding up around the major areas of support. And the basis band is currently coming in at 83,150. So again, anywhere below the mid to upper 80s, I'm looking, mid to lower 80s. I'm not looking for like a complete jettison of price action. That's already a big move down, a big correction off $108,000. It's nearly, 26 to 28% to the downside, right? So let me actually make sure my math is mathing, because it is a little bit later in the day for me right now. That would be, it's about 22%. And if we were going to go for the $80,000, that'd be the 26%. Weekly. Hey, look, it's actually still expansion of Bollinger Bands. And we see that the upper first standard deviation doing exactly what I said it might do on Friday. So let's go ahead and actually get rid of the local support and resistance zone stuff. And this is what, this is what the bulls have to do. By the end of this weekly candle, which is, going to be crossing over, essentially the beginning of the weekly candle is at the end of December, and the end of the weekly candle is at the beginning of January, right? So we have some things to keep track of that are going to be different than some of the longer term timeframes that we're going to look at in a moment here. We need to see bulls get back above the upper first standard deviation. That puts them in the volatility area of interest between the upper first and upper second. Currently, that is at $92,000 at the upper first. So we need to see Bitcoin reclaim that. Of course, there's some lows that it's losing in the lower term timeframes there that it needs to regain. So that's now overhead resistance on the daily and under timeframes, but also, it is a volatility level of resistance overhead now from the weekly. If Bitcoin can reclaim that area, put in a nice higher low, again, we have higher high, higher low, higher high. We're looking for another higher low in the weekly. Wherever that comes in, we see the basis band now at around that 77,400, and that puts it above the prior consolidation structure high side. So that's a good thing. We also see the lower first is above the last higher low on the weekly, which is at 58,863. So I'm not concerned about structure on the weekly at all. I think that we'll get a nice higher low, and we have to watch this higher high. We got to see closes above it for continuation of this particular uptrend. We have three parts of the trend in place. Yes, we have a swing higher low down here, but this was also a closing lower low as it related to this lower low close over here. The true break was the trend break here, which broke $65,000 and put in the swing high at 66,550, and then put in a higher low. This higher low was both a swing and a closing higher low. So we have higher high, higher low, higher high. We need to see that next higher low for a complete uptrend on the weekly on a closing basis. I highly doubt, it is a low probability, especially with the setup on the bands, that Bitcoin's going to come back down and take out that, that level at $58,000 to $60,000. I know that there are some people calling for that. I think that if Bitcoin were to do that, there's bigger problems on longer term timeframes. Let's put it that way. So for those that are calling for that and are really advocating for that, and like, I'm going to bid this, I'm waiting to bid this there. Well, guess what? You're probably going to be bidding into another lower high, and this is going to go sideways for an extended period of time. Good luck. Let's see how long you can hold on. Now for the weekly, we have hidden bearish divergence here on the weekly. Yes. We do not have any in-trend bearish divergence on the weekly. So what I'm looking for from here is wherever Bitcoin puts in its next low, when it does come up and put in any kind of a higher high, I will be hunting for in-trend bearish divergence. Why? Because if you look at the top side here where this RSI read is for the weekly, it is at around 78. We'll call it 79. That's what would need to be beat for on a closing basis for the weekly to avoid bearish divergence. Let's go ahead and get rid of this. And yeah, so it's 78. It would need to get to a 79. So let's go ahead and take the critical zone down to a 79. So it's an 80. Bring it down to a 79 and get the number that would need to be closed above for it to avoid any bearish divergence on its next high. And as it currently stands right now, that's $130,000. That also happens to be a major fib level from the macro timeframes. So if we were to look at our fib structure, not this one. Oh no, this one's fine. This one is fine. So if you were to look at the local fib structure, you'll see that that's the upper third, and it's the 1414. Excuse me. All right. Why is this important? Because that's also the area that needs to be closed above to avoid in-trend bearish divergence on the weekly. So wherever this puts in a high or low, it's got to come up and it's got to take out this high, of course, to continue the uptrend, right? And then, get above that 1272. Obviously, we're looking, at the different volatility levels, 110 to 112. And then we're looking, in the lower term time frames, 112 to 115, 115 to 120, 120 to 125. And then we're looking basically 125 to 130. That happens to be by the 1414. Bitcoin needs to close above there, which would put it in the critical zone on RSI without getting any bearish divergence in trend. And that would look really good. If it doesn't, and it closes up in and around this area, puts in a drive of bearish divergence, and we got to be careful, because wherever the next high or low is, we got to watch closely for any structural changes. But we are getting confluences between the 1414, the top side of the area that needs to be beat for RSI to avoid bearish divergence, at 128 to 130 as like a zone. And then, of course, we're getting that upper third standard deviation coming in there. So upper third fib level, and oh, my dog's walking around, scared the shit out of me. Yeah, the upper third volatility level, the fib level, and then, of course, RSI. And then if we look here, to turn momentum back to the upside here on the weekly here for a regular stoke, it's about $106,000. Go figure. That's one of the major areas that we have been talking about. And of course, if we look at the close open high here, it's at 104. And then, we've got the split the difference there between 104 and 108, and we got 106. And of course, that was a daily level as well. So pretty clear criteria. This is a pullback. It's a nice one thus far. So far, from, wick to wick, currently we're at 15%. If we get to 20%, you're going to hear people calling it a bear market while structure is still intact. Good luck to them in the longer term, right? But let's go ahead and continue out to the 2 week. 2 week is still in an expansive phase. And here's the cool part about the 2 week. This is still expanding. And the upper first is actually within the overall structure on the daily that we're looking for. Hold on one second. I got to get my dog out of the room. He's just bugging me now. Hey, buddy, go. Nope, go, buddy. I'll get you in just a second. You get to hear me wrangle my dog. We've had rabbits out at the house here lately, so he is freaking out because I think they start to come out once it hits dusk, and he is freaking out because he wants to go out and chase some rabbits. He actually has caught a few. No, he doesn't actually hurt them. Go figure. I thought he would, but he managed to get one, and he just wanted to play with it. So anyway, 2 week. Let's go to the 3 week. Hey, look, the 3 week, much like I had mentioned before, we got to be careful when we're seeing the 3 weeks still in a compressive phase on the band, but an expansive phase on the actual volatility metrics. We had the big drawdown to the basis band on the 3 week, and then the big move up to the upper third. Realistically, we need to see, in this case, mid to low 80s hold at the upper first for the 3 week to continue with its expansion to the upside, but we need to see consistent closures above the upper second. That's at $97,000. right now, and we need to get closes outside of the upper third, which is currently at 112. Here's the thing, though. This is just a sideways and up range, and it's very highly likely that the upper second and upper third is going to kind of put a cap on things and continue to do so until we see like a really strong close outside of that. And that's where we'd see bands really expand to the upside, and we'll see the lower second, lower first, second, and third really just shoot down. Kind of, like what we saw in this kind of a compression to re-expansion to the upside for the last big run. We see the bands drop off the bottom of the screen. That's always a telltale sign that you're getting the true expansion as well. Also when, evaluating Bollinger Band width percentage, which is our volatility metric as it relates to the bands here. We look at the 4-week, same kind of thing, right? We did start to see the expansion get reflected in the bands here on some of the closes back above. But this is setting up for a range, and you see how the range is just going to kind of grind up here unless Bitcoin can really close strongly above the upper second and upper third. The upper second is currently at $98,000. The upper third is at 120. Hey, all those numbers that I talk about, I'm just not throwing them out there. I'm basing them on some of these medium-term timeframes between the weeklies and the monthly here. If we look at the monthly, which is going to update, I do want to see Bitcoin closing above $95,000. That's the upper second standard deviation. Currently, the monthly still in a compression phase, or it's not in an expansive phase. Let's put it that way. It's in this kind of sideways and up grind. And we need to see Bitcoin close above the upper second and upper third to really kick off true expansion to the upside on the monthly. Like, that's the actual run. Like, yes, Bitcoin is running. It's in blue skies and like all that good stuff. But the actual run is a volatility expansion on the monthly time frame. Much like what we saw back here. A simple example is, we get rejected from the upper second, upper third. We come back down. We front run the rejection there, higher low, and then start closing outside of it. We get the real run on expansion. And that's kind of what I'm looking for at this point. And we've really only got, the November into December candle. So big November candle, December a little undecided, not completely crazy. Now, for those that want to compare it to 2020, please go back and look at your charts because, December was terrible. No, you're just remembering the bottom side wick of that candle. December was great in 2020. And, that's when you could get in just below $20,000, which was a back test of the all-time high, because November into December is when we broke the previous all-time high. Got that true expansion, and then went on a nice little bit of a run January, February into March before the big higher low structure to essentially equal highs here, and then dump down to bear market. What we're looking for here and what we're looking at is a bit of a different setup, because we had our first true expansion to the downside. The compression came when Bitcoin was testing back into this area in higher low fashion, or equal low fashion in this case. We didn't get our true closing low here. This was, I guess it kind of was. You had two swing lows, essentially equal lows there. But essentially, we were looking for was the high side of this to break and then go and test the bear market lower high, right? This was the lower high that kicked off the bear market. We got that on expansion, mean revert. We went back into compression. Now we're trying to get expansion again, but it's more of like a sideways and up consolidation. And Bitcoin can walk the bands up. It's just not going to be that parabolic blow off that everybody's looking for if that's the case. It will just look very, very structured. It will, of course, have big candles and go on runs to the upside and downside, which offers up great volatility for traders like myself who love to trade volatility. But for those that are waiting for like the immediacy of like some of these really deep targets, you're going to be waiting a while. Again, monthlies in higher low structure, the last higher low is at $49,000. I'm not concerned. You can see that the 58.8, which by the way is the last weekly higher low, the 58 to 58.8 level is right around where this the closes are coming in, right? And that's the higher low close in the monthly is at in this case $59,000. That weekly higher low is at 58.8. So that was this higher low that's coming in on this candle from October, which is at 58,863, was a back test of the close open that put in, and of course, in this monthly candle in October, put in this actual low and confirmed it. We just need to pay close attention to that. That is the last higher low, and this is an uptrend. The only way that we're looking at this as being anything bearish is if it were to break down below $49,000 and then get a lower high, right? So for those that are arguing that it's all over and everything's done and we're toast, and no, I'm sorry. Go look at structure on the monthly and then come back to me and make your argument, because you're just trying to front run something that you want to happen at that point. You're not front running reality. If we saw the last higher low taken out and then we get a lower high, then sure, I'm going to start entertaining bear market. But in this case, no. Sorry. You're crazy. 2 month is just beginning its expansion. We want to see closes come in the next day. This daily candle that's currently open, we want to see it closing above the upper second standard deviation at 83,311. That will continue expansion to the upside on the 2 month time frame. Now, 2 month time frame, of course, takes a while to play out. And this is expansion. This is confirmed expansion still. It's trying to save itself and get that more aggressive upside expansion. This is the danger, though, bulls. If you think that price is like just going to absolutely rip to the upside and not going to stop for the next year, one of the dangers is that this thing actually consolidates. Like it still goes sideways and up, but consolidates and maybe even has some bigger mean reversions for longer periods of time, right? So like what we saw, spring to summer, into this fall, into the Q4, we could see longer periods of time. And that's something that I'm going to be watching out for, first and second quarter of next year. I'm going to be keeping a close eye on it, right? And I'm not talking about the sell in May and walk away stuff, because that's only been true a couple of times, and it's usually true in bear markets and not bull markets. You can look at the chart. I can walk you through it here at the end if you like, but it is something that we have to entertain because a lot of this is price speculation. A lot of this price speculation is front running a lot of the narratives that have been built up around the incoming administration here in the United States. And they still have to implement these things. And if those things like take a little bit longer to implement, or there's some resistance and they have to like make some adjustments to like the Bitcoin Act, or, the Trump doesn't sign a bill that moves the Bitcoin immediately into the Treasury as a strategic reserve asset. These things will all lead to like bearish price activity in many cases that we can front run based on what the market is feeling and what some insiders are going to be trading on with their knowledge coming into a lot of this stuff. But there is always that potential that this just kind of grinds sideways and up, and we're capped on kind of the ceiling price by some of these levels of volatility until we actually get it cracking above in a major way. But what I will tell you is the 2 month looks great in terms of expansion and its expansive phase right now, but we need to see consistent closes above the upper second. So when it closes today, at the end of today in 22 hours and 21 minutes, we want to see it closing above 83,200, and then it's going to update. We want to see it closing above that next number, whatever this updates to, whether it's mid to upper 80s or low 90s. We need to see closes in the next 2 month candle, that being January, and at the end of February coming into March. We need to see where it closes. So I'm going to be keeping a very close eye on this. You can see that the upper third standard deviation is actually right at the 1272, which is the bear market Fibonacci pull from high to low. And that's at 103,645. This is basically 103,500 for the upper third here on the 2 month. Big one is the quarterly. Quarterly, of course, we need to see this close today above 82,550. The upper third, of course, is right there at the 1272. At around that $103,000 to $104,000. As the ranges get bigger, these numbers slosh around a bit. It's actually at 104,000, almost 105. That upper third is, even though it looks like it's just slightly above the 1272. We need to see continuation. This is a higher low, and a swing and a close because of the way that this quarterly is closing. This is above the prior highs. There is no resistance. Quarterly closes like this. It hasn't even really hit its true expansion on the Bollinger Bands. It is an expansion on BBWP. This looks good. It looks good for further continuation in the upcoming quarters. We still need to keep our heads on a swivel for some of the things that we're seeing. I hope that Bitcoin bulls can kind of hold up in the current area that they're in, and we see a nice January, even if the first part of January is a little corrective still, or still inside of the range. And then coming into inauguration and the end of the month, maybe we see a little bit further upside. That would look really nice. Things might be setting up for that right now, right? But throughout January into February into March, we really have to pay very close attention to what's going on in some of the longer term timeframes. If we do see a close above the upper second, I do want to start seeing closes above the upper third standard deviation of the Bollinger Bands. This is still in a compressive phase, not even close to expansion just yet in terms of the bands. This might change with today's closure. 50 over 41 for BBWP. This is confirmed expansion. No, this doesn't have a lot of history. We can pull this out to see that this has been less expansive over time for the quarterly when we're looking at like the index chart here. But, I'm still looking for quite a bit more expansion to the upside here. So I'm not worried about any of the longer term timeframes. Remember, quarterlies take a long time to play out. So understand that. And then when we start getting into some of the really long-term timeframes, like the 6 month, we can see that this would be the first ever expansion on the 6 month. And that's because, Bitcoin is a relatively young asset and it's only just started to populate bands since 2019. But we do have volatility metrics from 2016 is when we can actually get measurable volatility metrics because we were just kind of straight up. And then, of course, it's trailing 6 month for volatility metrics. So it's kind of seeing where this is. Between 2011 and 2016, we see that, price appreciated a lot, right? So it's very, very volatile, right? To when we get our first read there at 128 million, 760,680%. Right. So very, very volatile. This is true of all new assets. Very, very volatile, either to the upside or downside, right? When they first list on any major exchanges, and you can have some charted history. But you can see that, throughout Bitcoin's entire history, it has lived below its moving average and it's been losing its volatility, right? It's become a more stable asset over the time. And everybody's like, well, it's only ever going to become more and more stable because that's how things work. I'd certainly never looked at gold ETFs before. But yeah, anyway, that being said, this will be the first time in Bitcoin's history that it actually will confirm an expansive phase on the BBWP. It has hit expansion before on the bands here, but it wasn't really true expansion, right? We're just starting to populate since 2019. So more importantly, I don't really care about the bands on the 6 month chart. What I care about is this is the first ever expansion that we're seeing above a simple moving average. And in this case for BBWP, when we click on it here, we can see that this is a 13 period moving average. Right, so this is 13 6-month candles, right? And that's what we're looking at here for this moving average. That's what it's tracking. And this will be the first time that it's gotten its first volatility expansion. And we'll come back here to the quarterly again. And you can see that this has, doesn't mean a whole lot in the context of things when you get your first one. It is pretty important, though. We see that the first one that we got here was 2016 into 2017, right? We come down to the 2 month, we've actually normalized volatility on the 2 month, which is cool, because we saw the normalization back in the prior cycle. So we were expansion to mean reversion to compression to expansion. By the way, that's one of the reasons why I was screaming from the mountaintops, this is just a retest of the monthly close. Don't get too excited. And then, we saw many people get excited and absolutely wrecked coming into all the way into 2020, right? And then we got the true expansion, right? So we had volatility normalization, and the real volatility normalization didn't actually happen until we mean reverted back to the basis right here. So we had the compression, as Bitcoin was coming into its actual breakage of the bear market lower high. And then it's only really begun to start kicking off its expansion on the 2-month, right? So we've had volatility normalization on the monthly and lower time frames, and then we finally got it on the 2-month after coming out of the bear market lows into this, into basically running back the highs. We're in a bull market, but not the actual bull run until we broke the prior all-time high. And then now the 6-month, it's getting its first ever expansion. If we go out to the 12-month, we'll just take a look at the charts, and there is no Bollinger Bands to populate here, but pretty easy to understand what's going on here. And that is that we've got the 2013 high, we've got the 2017 high, and then we've got the 2021 high. And you might notice a little bit of a pattern here that we break the prior all-time high on the yearly, and then the next year we kind of went a little sideways. So we kind of cracked it all in 1 year in 2017, right? If we look here in 2020, we got some continuation into 2021, came back down and retested. Didn't retest the yearly close open highs, but then we've got this yearly breaking out. Does that mean that we're going to get full on continuation? Don't know, right? That we have to evaluate. I would hope so. But what you don't want to see is a big old wick up and then come right back down, because then that will spell some trouble for the end of 2025 into 2026. There's some people that are on the super cycle bandwagon, and one of the things that I will tell you is when looking at like the 6-month, I can get on board with a super cycle. Because we're seeing on the 6-month, we're seeing its first ever compression, not the 6-hour, but the 6-month to expansion of volatility. And this is where we've had this, slower period of time in here. And at some point it's going to crack out to the upside with volatility expansion, like in a true way. But on a 6-month, you're talking about years to play out, and you could have entire bear cycles on the lower term timeframes in those years to play out, right? So, just be aware of that. I think we are in a bigger structure. I think that this structure started coming off the bear market, coming off the bear market back here in 2018 into 2019, and then the retest in 2020. I think this is a bigger structure personally. You can see that we did get the expansion to recompression, but I do think that overall, when looking at this in terms of the 6-month, I think it is a bigger structure. But, we have to see it prove itself out. Like I said, this was going to be a long one. I'm not going to talk to you until the new year. I will actually try to get a video out on Wednesday. Yeah, because New Year's Eve, I'm not going to have anything else to do that day. Once it gets to like closing time for the candles here, but understand kind of where we are, understand what we're looking for. $90,000 to $92,000 essentially is what you want to see hold up for the bulls. Otherwise it's going to be down to test, the area around the upper 80s, mid to upper 80s. And for today, we want to see basically closes here or higher. That would look good for some of the very long-term time frames. And, and I do think that that 6-month is something that we'll talk about on Wednesday, because I want to see what starts to happen there and work our way down to the quarterly, 2-month, monthly, and see where everything updates to. Weekly won't matter. A lot of the weeklies obviously aren't going to matter till Sunday anyway. And yeah, that's going to be it for me today. I know this was a longer one, and I hope that you have watched it to this point, and you have a wonderful morning, afternoon, and evening. Have a safe New Year's Eve into New Year's Day, and I'll talk to you again on New Year's Day next year. Take care. Landy out.